October was one of those months that reminded investors just how unpredictable the Nigerian market can be. For most of the month, everything looked perfect. The naira was stable, confidence was back, and investors were smiling again as the NGX rallied to one of its strongest months of the year. Then in the final few days of October, everything changed. A major geopolitical shock hit right when the market was celebrating Nigeria's biggest policy win of 2025, instantly wiping off over 2 trillion naira in value and reminding everyone that even in a bull market, risk never sleeps. So as we step into November, investors are now asking, can the strength of our domestic economy and the reforms that have stabilized it withstand this new global pressure, and which Nigerian stocks are best positioned to benefit if confidence returns? Hello my colleagues, welcome back to the channel. In today's breakdown, we will unpack how the naira hit its strongest point in months while inflation continued to cool down, the massive rally that added over 7 trillion naira to market value, the two key headlines that changed everything for investors, and finally two Nigerian stocks I believe are worth paying close attention to this November. So make sure you stick around till the very end of this video, because the way this market moves in the next few weeks will set the tone for the entire year-end rally. Before we get started, please do me a quick favor, hit the like button so more investors can see this breakdown. Subscribe to the channel if you haven't already, and join my WhatsApp channel using the link in the description and pinned comment. That's where I share my market research and what I'm tracking in real time. Alright, without too much talk, let's jump right into today's video. Let's go. Before we look at where the opportunities might lie in November, we need to take a quick step back, because October was one of those months that had investors feeling everything from excitement to anxiety. For most of the month, the market was in beast mode. There was strong rallies, investor optimism, and policy win that made it look like Nigeria had finally turned a corner. But by the last few days, things took a sharp turn, reminding us that the stock market doesn't move in straight lines. Let's start from the top, which is the big picture. First is oil. Brent crude prices actually dropped a bit in October, down about 3% to roughly $63.75 a barrel. Now that might not sound like much, but it matters because oil still drives a big part of Nigeria's revenue. The drop came mainly from oversupply fears globally, meaning there was too much oil chasing too little demand. Now onto the naira, and this was one of the big success stories of the month. The naira actually strengthened by about 3.6%, closing around 1,420 naira per dollar in the official market. That's its strongest level in almost 10 months. And this wasn't by accident. Nigeria's foreign reserve climbed to a 6-year high of $43.4 billion. That gave foreign investors confidence that the central bank actually has enough firepower to defend the currency and make it easier for people to repatriate their profit when they invest in the country. Now coming over to inflation, the trend stayed encouraging. Analysts estimated that headline inflation cooled further from 18.02% to around 15.84% in October, thanks mainly to the harvest season bringing food prices down. And although the CBN didn't hold the regular MPC meeting that month, the earlier rate cut to 27% in September still stood as a signal that they are confident inflation is coming down without hurting growth too much. So in summary, there was lower inflation, stronger naira, and healthier reserve. Everything looked like Nigeria was finally stabilizing. But then came the turnaround. On the very last day of the month, October 31st to be precise, the US redesignated Nigeria as a country of particular concern. Now for beginners watching, that's basically a diplomatic red flag, a label that could trigger potential US sanctions or trade restrictions. And for investors, that's the kind of news that instantly triggers panic, because it creates uncertainty about how foreign relations might impact capital flows. Now let's talk about the market itself, because before that geopolitical bombshell, the Nigerian exchange was flying high. The all share index surged by about 7.4% to 8% for the month, adding roughly 7.2 trillion naira in market value. That made October the second best month of the entire year for the market. Leading that rally was the industrial goods sector, which jumped an impressive 17.5% thanks to renewed confidence in local manufacturing, and of course the government's 15% tariff on imported fuel, a move designed to protect local refining giants like Dangote Refinery and other industrial names. Among the top gainers, we saw ASO Savings and and loans, which exploded by over 56% in the final week after its suspension was lifted. Dangote Cement and Bua Cement both rallying more than 10% to 12% on renewed optimism about domestic demand and those new tariff that was passed. On the flip side, not everyone had a good month. Somatech Ventures fell over 21% and John Holt PLC dropped nearly 17% as investors rotated out of penny stocks once the late month shock hit. Investors' mood in October was like a roller coaster. At first, the sentiment was extremely bullish. Nigeria's removal from the FATF grey list on October 24th gave the market a huge confidence boost. It meant global financial systems no longer saw Nigeria as a high-risk country, which opened the door for more foreign portfolio inflows, fresh foreign money coming into our stock and bond markets. Add to that the fuel import tariff and strong FX reserves, and everything was pointing up. But once the CPC resignation hit, all that optimism flipped to caution overnight. We saw quick sell-offs and profit taking that reportedly wiped off over 2 trillion naira in market value heading into early November. Still, the overall message from October is this: Nigeria's domestic fundamentals are strong, but the market remains vulnerable to external shock, especially geopolitical ones that investors can't predict. Now, with all those major wins and that single massive geopolitical twist behind us, the real question for every investor watching right now is, what does this mean for the month of November? We are already a few days into the month and we have seen how the initial shock caused an immediate heavy correction, wiping off a lot of October gains. The market is now stuck in a high-stakes wrestling match between strong domestic economic reality and unpredictable foreign policy risk. So the question still remains, where are the opportunities? You see, personally, I've been tracking which sectors and companies are best covered from or could even benefit from this new environment. We need to look for businesses whose growth is locked in by those new protective government policies, but which also have the resilience to withstand a potential diplomatic fallout in case things start coming to our country. You know what I mean by things actually. As always, I'm combining both fundamentals, things like policy shifts, earnings report, and the strong Naira trend with a little bit of technical analysis, so we are not just chasing hype but looking for solid setups in the market. So let's break down the 2 Nigerian stocks I'm personally watching closely this November. I might hopefully buy if they hit my targets. But right before we jump into the first stock on my watch list, a quick word from the sponsors of today's video, DTunes. If you trade or invest in crypto here in Nigeria, this is something you want to pay attention to, because one of the biggest challenges we face as Nigerian traders isn't timing the market, it's finding a platform that actually delivers speed, transparency, and security every single time. That's where DTunes comes in. DTunes makes trading crypto feel like it should have all along, smooth and stress-free. No waiting hours for confirmations, no dealing with random third parties, and definitely no network delays that leaves your funds hanging. You can sell Bitcoin, Ethereum, or USDT directly for Naira and get your payout instantly at transparent top-of-market rates. And here's my favorite part about DTunes. Every single trade you make on DTunes earns you real rewards. There is a live leaderboard that tracks your activity, and at the end of the month, DTunes literally pays out cash rewards to top traders. So you are not just trading, guys, you are getting rewarded for it. It's fast, secure, and rewarding, the way crypto trading should actually feel. So if you are into crypto, stop stressing about unreliable platforms. You can use my link in the description or head over to the Google Play Store or Apple Store, download the DTunes app and start trading smarter today. Big thanks to DTunes for sponsoring this video. Now let's jump straight into the first stock on my list. The first stock on my watch list for November, and honestly one I'm personally very bullish on, is Wema Bank. Now, if you have been following the financial sector this year, you already know Wema has quietly become one of the most exciting growth stories on the Nigerian exchange. Wema Bank isn't new, it's one of Nigeria's oldest commercial banks, but what makes it different today is how aggressively it's reinventing itself. They are the bank behind digital apps like Alert, which is Africa's first fully digital bank, and that particular app has been a huge part of their turnaround. It's basically Wema's secret weapon, cutting costs, attracting younger customers, and allowing the bank to scale faster without opening more physical branches. Now let's talk performance. Wema Wema's stock was on fire in October, up over 20% for the month, with massive trading volumes that pushed it into the top 3 most traded stocks on the NGX. At one point, it hit 22 naira per share, which is its recent high, before pulling back slightly to around 19 naira 25 kobo as of the moment of making this video. That pullback isn't necessarily bad. In fact, I see it as a healthy correction after a strong run. The key levels I am personally watching is around 17 naira with what's happening lately in the market. This particular price was the price as of late September before the big rally began. That's my ideal buy zone. But honestly, with the kind of activity we are seeing in the market, it may not even get there. So for me, this is a DCA, which is like dollar cost averaging stock. I'll start buying it in small tranches, average down if it dips. And here's why I'm personally bullish about Wema Bank for November and beyond. You see, Wema Bank is one of the few institutions that fully met and exceeded the new CBN recapitalization requirements ahead of schedule. They raised over 264 billion naira in qualifying capital. That's about 32% above the minimum required. So while other banks are still trying to meet the new target, Wema is already free to focus on growth. Their latest result also backs that up. Profit before tax is up over 141%. Profit after tax is up 142%. EPS, which is earnings per share, more than doubled. That's not hype, guys. That's execution. And to top it off, they declared a 1 naira per share dividend, which is more than double what they paid last year. That tells you that management is confident in where things are headed. Now let's zoom out for a second. Yes, the market was shaking late October after Nigeria was designated as a country of particular concern by the US. But even with that, Wema's domestic fundamentals remain solid. The FATF grey list removal boosted investors' confidence in Nigerian banks. FX reserves now at a 6-year high, which stabilizes the naira and supports capital inflow. And the MPC's rate cut in September actually means cheaper borrowing, which is good for loan growth and credit expansion. If you put all that together and you have got a setup where banks like Wema with strong digital infrastructure and fresh capital can really outperform. So here's how I'm personally playing it. If Wema Bank drops closer to 17 naira, that's a strong accumulation point for me. But with the kind of volume we are seeing, like I said earlier, and the fact that it's one of the most actively traded financial stocks right now, I'm already scaling into the stock gradually. Wema feels like a mini GT bank in the making. Same innovation, kind of energy, but still undervalued at today's prices. So for me, this is both a November play and a medium-term hold going into 2026. Now, the second stock on my list is a completely different kind of play. While Wema Bank represents stability and growth, this next one represents volatility and upside. I'm talking about Sovereign Trust Insurance with the ticker symbol Sovereigns. Sovereign Trust Insurance is one of Nigeria's most active non-life insurance companies, covering areas like motor, fire, marine, oil and gas, and accident insurance. They are not one of the biggest yet, but they are definitely one of the most aggressive players, especially with how they have positioned themselves for the NICOM recapitalization deadline coming up in 2026. The company is currently working on a 20 billion naira capital raise, which could put them comfortably above the 15 billion naira requirement and instantly de-risk them from any regulatory pressures. That's the real story driving the stock. Now, the stock's price movement this year has been crazy. From about 0.91 naira in April, Sovereign Trust ran all the way up to 4.89 naira at its peak by late October. That's over 400% in just a few months. But here's where it gets interesting. After hitting that high, the stock corrected hard down, actually down by about 31% and closing at around 3.33 kobo by November 5th. And as of today, it's trading even lower, around 3.08 naira per share. That means the key support zone of around 3 naira 33 kobo to 3 naira 50 kobo did not hold. So if this correction continues, 2 naira 75 kobo becomes the next major support I'll be watching closely. This is exactly the kind of setup traders look for: massive previous volume, sharp correction, and a potential re-entry zone forming near a major support. Even with that heavy pullback, here's why Sovereign Trust Insurance is still worth watching. You see, the company's entire story revolves around recapitalization. That's 20 billion naira fundraising. If they pull it off successfully, they will not only survive NICOM's deadline, but they will also be in a position to acquire or merge with smaller, weaker insurance. That's a big opportunity because once consolidation starts in the insurance space, the few that are well capitalized will dominate the market. It's a high stakes bet, but if they execute, the upside could be significant. And the early momentum shows investors are already speculating in advance of that event. On a broader level, the financial sector in Nigeria just came out of two major waves, one good, one that is bad. The good one is Nigeria was officially removed from the FATF grey list, which I've mentioned earlier on, as of late October, which improves investors' confidence and reduces compliance costs for all financial firms, including insurance. The bad is that the US redesignated Nigeria as a country of particular concern, CPC, and that triggered a short-term sell-off across the NGX. That second part is important because a lot of the current price weakness we are seeing in sovereign trust might simply be panic selling caused by that single event, not a reflection of their actual fundamentals. So here's my perspective. Sovereign trust is not a defensive play, it's a momentum and regulatory event play, meaning you buy when the market overreacts and you position ahead of the recapitalization announcement. At 3 naira 08 kobo, it's now trading about 35% below its October peak, which gives room for potential upside if accumulation returns around this level or around the 2 naira 75 kobo support zone. But let me be clear, this is not a buy and forget kind of stock. This is the kind of stock you watch like a hawk. Manage your position size carefully and take partial profits quickly if things start to spike up again. If they execute the 20 billion naira fundraise successfully, that's the kind of news that could easily send the stock back towards 4 naira 50 kobo or even 5 naira and beyond, possibly within a few weeks of the announcement. But if that fundraise stalls due to the current geopolitical uncertainty, it could easily retest 2 naira 75 kobo or even go lower than that. So this is a high risk, high reward play. The question is, are you patient and are you willing to watch the stock closely? And that wraps up my breakdown of the two Nigerian stocks I'm watching closely and hopefully buying this November: Wema Bank and Sovereign Trust Insurance. Both companies represent different sides of the opportunity I'm seeing in the market. Wema is a solid, fundamentally strong bank that is redefining digital growth in Nigeria, and Sovereign Trust is that high risk, high reward play riding on the recapitalization wave in the insurance sector. Now, I would love to hear your thoughts. Which of these two stocks are you personally watching this month? Do you think the market still has enough momentum left for a year-end rally, which is the market's going up, or are investors playing it safe? Let me know what you think down in the comment section. If you found this breakdown helpful, please leave a like, share the video as well with another investor who will benefit, and subscribe to the channel if you haven't already. It really helps the channel grow. Also, big thanks to DTunes for sponsoring today's video. Make sure to check them out, and also don't forget to join my WhatsApp channel using the link in the description and pinned comments. That's where I share my market updates, trade ideas, and what I'm tracking in real time. As always, remember to stay sharp, stay safe, and invest wisely. They will.